Are markets picking up or are they down? I'm looking at Sensex marginally up. If you're able to refresh that.
Started marginally up, has gone marginally down. I would call it pretty much flat. I think it's been in line with how it closed yesterday. No major movement in any buying or selling activity ever since the markets closed yesterday. Now, 2-3 big news items to watch for, Shweta. Number one, of course, we'll have to look at US markets as they open later this evening, India time, because the US Fed is likely to do the one final round of rate hikes on Wednesday. There's a 98% chance, according to the CME market check, that there is a 98% chance of a 0.25 percentage points 25 basis points increase in the rates in US, and that is likely to have some sort of a selling pressure in the US stocks, which could directly impact Asian markets and Indian markets. But as of now, markets have been fairly flat. This is also on account of a slight sell-off of foreign portfolio investors, FPIs in India. FPIs have sold about 98 crore rupees worth of shares yesterday, but that has been more than compensated for by buying from domestic institutional investors or DIIs. So overall, the market has squared itself off and it's been a flat start. Right now, as we speak, 10:02 a.m., Sensex down just about 26 points or 0.04%, hardly any decline, trading at 66,357. Similar story with Nifty. Nifty up third decimal points, 0.003%, up just about 0.65 right now. So markets have been more or less flat. Let's look at the stocks which are in action right now and try and make sense of why they are being traded. So if you look at ITC, among the most active stocks right now, I think news of demerger in the wee hours of the closing of the markets yesterday suggested that the markets have not taken very kindly to the hotels business being demerged from the ITC parent company. So some selling pressure over there. Yesterday, remember, we also saw Cafe Coffee Day stocks take a plunge. They nosedived almost 20%, 19% or so on the markets. And this was on news of insolvency trickling in. Of course, we'll get into that story later on in the show. And Reliance is seeing some buying activity. I think this again is happening on account of the new data centers that the company is deciding to put up along with the Brookfield in a special purpose vehicle. So overall, right now, Reliance is trading healthy, up about 0.3%. Remember, Reliance was down again after the demerger news and when the quarterly results were not in line with street expectations, but more or less flat, not much of a recovery there. ITC, of course, bearing the brunt of the announcement of its demerger. So that stock is squarely in the red right now, down about 2.7% or so from yesterday. Overall, if you remember, ITC again was a story where we were talking about the breaching the $6 trillion market cap, being the 7th Indian company to breach that historic figure. I think if you look at that calculation now, and if you look at the 5-day moving average, the stock has come down from its highs of about 496 rupees a share to about 458 right now. So that's the update on the market this morning, Shweta.
All right, let's get on to these stories one after the other. Let's deep dive. To begin with ITC, the demerger, as you pointed out, happened wee hours right after markets closed. We tracked that story, but very, very briefly. I want to begin by understanding, for the benefit of our viewers, what does the demerger really mean for ITC business? Overall, I am assuming market was expecting a full demerger, but that hasn't really happened. The parent company will continue to hold 40% stake in ITC Hotels.
That's right, Shweta. So whether that 40% will be held completely by the parent company or would then be offset again in the market is something that that is yet to be seen. But what I understand is that unlike Reliance, when it delisted the Jio Financial Services business and promised a 1:1 share allocation, which meant for every single share of Reliance Industries held by the shareholder, there would be an equal 1 share allocated in the new entity of Jio Financial Services. That ratio has now moved to 0.6, which means for every 1 share owned by a shareholder in ITC, once the demerger is through, will be So the share allocation will be 0.6 or 60%. So for every one share you own in ITC, you will own 0.6% of a share in the demerged hotels entity. But having said that, right now, if you look at how this demerger is specifically panning out, the percentage of revenue when it comes to ITC is just about 4% on the hotel side. The rest of the pie, and let's bring up those pie charts on the screens first up. If you look at the pie chart, you'll see that 33% of the ITC revenue actually comes from the cigarettes business. 26% comes from the FMCG business minus cigarettes. Move on to the next bucket, which is the agri business. That commands about 25% of the revenue, followed by paperboards and packaging, which is 12% of the business, and just 4% is actually held by the hotels business. So hotels business contributing only 4% to the ITC overall revenue pie, and that suggests to a lot of stakeholders that if it's just a 4% business, is there any need to demerge it? It's not a large contributor to the business. So by demerging it, what value are you actually trying to unlock? Remember, in the case of JFS, there was a great deal of excitement when Jio Financial Services was slated to be demerged, because it was going to be the 5th largest financial services company. The value that it was sought to command from the market, it over exceeded that when the price discovery actually happened. In the case of hotels on ITC, shareholders are not very confident of what value unlocking is Sanjeev Puri and the management team of ITC hoping to do because of its small contribution to the overall business pie. But coming back to what this demerger is going to mean for shareholders, number one, the proposal is out yet, but it still awaits the approval of the board, and the new amendment or the new plan scheme is going to be proposed to the board of ITC on the 14th of August, and that is when a decision on this demerger will eventually be made. Any fine tuning to the share allocation of 1:0.6 could be up for debate in that presentation, or could go through as the case may be. And broadly, I think what Sanjeev Puri is trying to say here is that he's trying to unlock the value of the hotels business separately.
So particularly hotels business, because we are in a post-pandemic era where hotels seems to be booming, business is back on track.
Yeah.
Is that what they're referring to when they're saying trying to unlock the value of hotel business? Because as you rightly mentioned, the share of the profit pie for revenue pie for hotel business is not as large as compared to other businesses that ITC is currently operating. Are they going more bullish now with hotels, and with it's once again picking up, and we are seeing there's more travel, there's more air ticket booking, there's more hotel booking. Is that what they're referring to?
So Shweta, as I see it, and I'll have to dig deeper into the books of ITC to make more sense of what I'm trying to say and corroborate that with numbers. But as I see it, hotels is a capex intensive business. Hotels is a very cyclical business, and the properties that ITC holds are premium hotels. It's not like the Tata Group once invested in Ginger Hotels, which would cater to a larger demand of travelers, both business travelers as well as budget travelers. ITC does not operate on a budget hotels model. It's a capex intensive business. It's very asset heavy. So while the balance sheet of the hotels division would look very healthy because of the sheer size of the assets, if it's not generating enough revenue on a month-on-month, quarter-on-quarter basis, and hence if the cost of operating and maintaining those luxury hotels or premium hotels is much higher than the average revenue that they generate, the P&L is likely to be in the red. And that has a direct impact to bring down the overall value of the ITC share.
Okay.
So ITC minus the hotels business may be able to unlock another value for its shareholders, because other businesses will be able to scale up and grow and capture territories much faster. They will have direct competition. Let's say when you talk about the FMCG business with the likes of HUL and P&G, and perhaps right now the asset heavy but P&L light hotels division in the overall pie of ITC is not letting it compete on share price or even on overall value unlocking with the rest of the FMCG pack. So once hotels is demerged as a separate entity, ITC may be able to take on the likes of HUL and PNG head on head, right? And hotels then as a separate business will be able to create some sort of a value for themselves and maybe look at expansion, look at attracting new investments, both retail as well as institutional investment, to grow that business separately and not under the umbrella or the aegis of a century-old ITC brand. So it may be able to unlock value for both, but shareholders don't seem at this moment very confident of that value unlock to yield much dividend or much return for them, and that's why we are seeing some sort of a selling pressure in the ITC stock.
The stock is down. Remember, it became the 7th company in India to reach a market cap of 6 trillion rupees. The market cap is just under 5.8 trillion rupees as of this morning. We will of course keep bringing you those details, but shifting focus to Cafe Coffee Day, and that's a story again that is affecting stock market directly. We understand that the global market of Cafe Coffee Day, I beg your pardon, is not really taking off. It's filed for bankruptcy.
That's right, Shweta. And troubles, in fact, started mounting for Cafe Coffee Day. Though I would, just one
Let's say
disclaimer.
It's CCD.
It's CCD, sure, CCD, right? Or Coffee Day Global Limited, CDGL, whatever you prefer.
All right.
So Cafe Coffee Day, CCD, honestly, it's a very small player when it comes to stock market. So, its stock nosediving is not directly impacting the broader markets, even a little bit, right? I think it'll be the second or third decimal point. But overall, CCD, the business has been finding itself in trouble brewing fairly strong ever since its founder, Vijay Siddhartha, had died by suicide in 2019. So just to jog memory and for the benefit of our viewers, I think 29 July 2019 is when Vijay Siddhartha went to the banks of a river in Bangalore, where he told his driver to wait outside and went for a stroll, went for allegedly, just to walk and clear his head, and never came back. And 2 days later, 31st July, is when his body was recovered and he had drowned. And the reason cited, of course, later on, the letters that got revealed, was that it was a clear case of suicide because of debt and because of harassment from the income tax department. Now, ever since that, there were people who were fairly bullish on Cafe Coffee Day, given the overall size of its business, the number of cafes it operated on, the number of cities it was operating in, and overall robustness on the fundamentals of the business, despite the loan. And that loan in 2020 stood at over 1600 crore rupees, 1644 crore rupees, which Cafe Coffee Day owed to 13 lenders. But overall, the company was touted to steer itself clear of many of these, loans and the financial troubles that it saw itself in. Vijay Siddhartha's wife had taken the realm of the company and continued to operate it, and has been able to run that company for the last 4 years or so. So successfully would again be, at what benchmark do you consider success? Because the company has been making losses. But if you look at the size of the losses, it is not earth-shattering. Against a revenue, I'm talking about last year, against a revenue of 920 crore rupees, the losses were just about 68 crore rupees. So while it was still making losses, I don't think these losses were earth-shattering. We've seen startups, unicorns, decacorns making losses in much higher volume than Cafe Coffee Day, right? So against a fairly healthy revenue of almost 1,000 crore, losses were only in double-digit crore rupees, 68 crores or so. So I think over time, CCD would have been able to mitigate those losses. But what has happened is that one of its lenders that CCD owes 94 crore rupees to, has taken CCD to the insolvency court, NCLT, in Bengaluru, and NCLT has admitted CDGL, the parent company, Coffee Day Global Limited, to the insolvency proceedings under the CIRP, which is Corporate Insolvency Resolution Process. And I think now the insolvency plea is going to take shape. Right now it's just an oral order. We are waiting for a written order also to come in, and once that written order comes in, I think an interim resolution professional will be appointed. We may look at some selling off of the existing retail real estate inventory that CCD holds to be able to pay the immediate creditors whatever is due to them, and thereafter let's see if it actually goes out of business or is able to charter a new direction for itself.
All right, so we will of course keep waiting for those details. Krishna Kumar joining us at this point in time. Krishna, good morning. I think it's an important story, not just for the point of view of business for CCD, but also for CCD lovers, I would say. I'm not sure if it's going to impact their, hopping into CCD every now and then, but Cafe Coffee Day filing for global bankruptcy is not going to augur really well for a lot of people who really hold it dear to them. Krishna, you're on mute.
I hope you can hear me now. I'm very sorry about that.
Can. Yes.
What I was trying to say was really simple, that what is happening in Cafe Coffee Day sort of tells you the changing landscape of coffee chains in India. CCD or Cafe Coffee Day was the pioneer in these things. When it opened, a lot of questions about, it costs such less for a cup of coffee outside of CCD. Why do you pay so much to go inside CCD? And then it was Cafe Coffee Day sort of first told Indians the entire idea of going to a coffee place and just sitting and chilling and talking. It began with Cafe Coffee Day, and it began with essentially, Shweta, if you remember, with all of us watching Friends, the American sitcom, and the famous Central Perk coffee house that used to come in Friends, and CCD was our Indian replacement for that. So many people recreated their Friends fantasies by going inside a Cafe Coffee Day and chilling and sitting over there. And look at how far we've come now. Starbucks, the world's largest coffee chain, is here in India and constantly expanding. Now, Starbucks has become ubiquitous across Indian airports. Add to that, you have the likes of Costa Coffee, Coffee Bean and Tea Leaf, and Barista still around. I mean, we all thought like Barista was over and done with the kind of financial troubles and the kind of lack of sales that they were witnessing. But somehow Baristas, are still around. Bear in mind, Baristas and Cafe Coffee Days were the big competitors in coffee chains at one stage. Now, clearly, both CCD and Barista are fighting for survival. Cafe Coffee Day is still doing better in terms of number of cafes that they still have open. And as Karthik rightly pointed out, Byju's wife doing a sterling job of taking matters into her hands after that extremely unfortunate incident of his suicide, and pushing forward. I think that at this stage, whatever happens with the insolvency proceedings, you've got to give it to that to the wife, a widow who's worked so hard to keep the CCD flag flying high. As far as the future of Cafe Coffee Day is concerned, I still believe with the kind of prices that you witness in a Cafe Coffee Day, that you witness in a Starbucks or a Costa Coffee, Cafe Coffee Day still has logic to exist. A lot of Indians, especially from middle class and lower middle class, still find it aspirational to go to a Cafe Coffee Day and have a cup of coffee over there and just chill with their friends over there. And many of them will not be able to afford the prices that a Starbucks or a Costa Coffee has in its price list. So there is a future, if you ask me. I'm still optimistic that it will come out of these insolvency proceedings stronger and sort of find a niche for itself, with all the new people being added to the lower middle class segment or the middle class segment of India, whereas the upper middle class and the most aspirationals can continue to throng the Starbucks and the Costa Coffees, Shweta.
Right. Yes, Amit. I think just to take away from what Krishna said, I think he's absolutely right in saying that it was CCD and Barista that brought coffee to Indian shores. I mean, up until then, we were more private, single restaurant or a hotel.
Drinkers. I think we were as a population,
primarily
tea drinkers. And the coffee culture
came with CCD.
Yeah. I'm just adding to what Krishna said. It's a very difficult space. CCD is in troubled waters, Barista is in troubled waters. Costa Coffee closed down in Bombay, apart from quite a few other cities, almost 5 years ago. And so it's a curious space. Starbucks has starters behind them. So they're going, like Krishna mentioned, everywhere they can open, they have a Starbucks now. Dehradun has two. So, yeah. So, and the space is a little curious also because there are brands like Gloria Jeans, which is a coffee brand, which is also there in India, which is also creating space for itself. So it is a difficult space. It's 94 crores. I hope they get out of it.
All right. Forgive me, I am not a coffee lover. But if I were to be one, I see more of a brand and a status attachment to drinking coffee.
It's a hangout.
and to hang out primarily, as opposed to, this is our favorite beverage and we ought to drink it daily. But I'm not sure, for maybe Karthik, who's a coffee lover, can apprise us. Okay, Krishna wants to come in first. Yes, Krishna.
Right. Let me take you back in history a little bit. Since I come from Chennai, and all of you might be talking about the famous South Indian filter
coffee. Absolutely.
Which basically means the whole of South India drinks coffee and the whole of North India drinks tea. That's the common assumption you would come to. Whereas the fact of the matter is that 67% of South India drinks tea. We as India, North, South, East, West put together are an overwhelmingly tea drinking nation. Why the fact of the matter is that tea is cheaper, at least the kind of chai that we consume and the patti that you need for it, it's very cheap. We're not looking at some oolong tea or one of those things from Earl Grey's or one of those things from England. We're talking about a regular desi chai. The patti is really dust tea or whatever it's called. The patti is really cheap. So India largely drinks tea, even in South India. Let's not forget that 60% of South India still drinks tea, always drinks tea. And coffee came to South India as like what you're talking about, that aspirational drink, because it was expensive. So for you to show your own economic progress, say when guests came over, you served them coffee to show off that like, hey, I made enough money to buy those coffee beans and make that filter coffee. So it was aspirational right from the beginning, this entire coffee drinking culture. The fact that that aspiration manifests itself in a coffee house kind of a situation where people, irrespective of whether they are coffee drinkers or chai drinkers or whatever drinkers, they show up at that location because that is the aspiration, to go into a place like that which looks chic, modern, new construction building, no time limit on how long. If you have one coffee, it doesn't mean you have to leave the moment the coffee is over and done with. It is those things. It is that restaurant experience, which you will see even chai players in India doing it with the likes of Chayos and many other chai cafes that are really mushrooming in India. So in that sense,
it's interesting. It's interesting you brought Chayos. It's interesting, Krishna, you bought Chayos because Chayos clearly seems to be doing way better than many other coffee businesses, including your baristas and CCDs. But we will come back to the story. I know it's interesting. I know a lot of you are coffee lovers. We will come back to this story at a later stage in time. But moving on to another important story that we're tracking, and that is coming by the way of Byjus. Karthik, Byjus is trying to get its house in order. Byju Ravindran has been in a lot of trouble of late, and be it trouble with respect to loans, be it trouble with respect to some of his clientele, the customers, and the fact that the government says we're now going to look into Byju's, whether there was any lapse in corporate governance. Then he wrote a mega letter trying to clarify his position, trying to talk about how much he's put in to build that company. It now appears there may be some resolution, at least something that Byju Ravindran can sleep peacefully on, and that is his term loan B. There is a resolution there, and there's also cost-cutting measures that continue to be unabated. Obviously, Byju is trying to keep as much revenue, as much profit it can in its books, trying to make sure that it cuts corner as much as it can by the way of having excessive staff, obviously.
Right, Shweta. So I think Byju Ravindran, number one, is trying to put together a dream team that can deliver. Okay. And that dream team right now consists of these two gentlemen, in addition to the family members which continue to be on the board. So this includes Rajneesh Kumar, former chairman of SBI, and the legendary Mr. Mohandas Pai, both of whom have, despite all the all the turmoil at Byju's, despite all the grief and despite all the negative press that Byju's has received, have taken that onus upon them to help the company steer a clearer direction for itself. And that comes now by way of two important factors which you mentioned. Number one, of course, is the restructuring of the loan. So now this restructuring of the loan with the three main creditors, to which Byju's owes about $1.2 billion as of now, there's likely to be an amendment of that structure of the Term B loan, which should come into effect before 3rd of August, as per what we understand the company has released in the press. So by 3rd of August, there is going to be this resolution with the three leading creditors who own about 85% of the total $1.2 billion loan. And the amendment is going to consist primarily of three basic tenets. Number one, there is going to be no loan acceleration, which means these creditors are not going to push for an early recovery of the loan or an early settlement of the dues on account of Byju's to them. Number two, these three lenders are not going to litigate. They are not going to take Byjus to court, and they will end whatever litigation they have started already. Right. And number three is going to be no enforcement, and this enforcement is going to be by way of prevention of undue enforcement. I don't know how that is going to be written in the final restructured contract, but there is not going to be any enforcement on account of recovery of this loan. This comes in lieu of Byjus at least paying up the interest component of the loan upfront. So this helps overall defer the immediacy in the payment of the $1.2 billion loan, which should put some sort of an ease in the overall cash flow of Byjus at this moment. I think the interest component should be not more than 6%, 7% of the total term loan amount. And if Byjus is able to put that up front, then this new amended clauses come into action. So this $1.2 billion loan can then be treated like a term loan and could be repaid over installments over a fixed period of time. Right. So this is number one. This, I think, is obviously some sort of a renegotiation, which I assume could have happened with Rajneesh Kumar coming on the board of Byjus and helping Byju Ravindran and the family and the employees renegotiate this existing contract with the creditors. So this is part one of the solution or potential solution to the road to resumption for Byjus. Number two is the cost-cutting initiative, which began with laying off employees, about 3,000 of those, over a period of time up until as late as last month. And now with this cost cutting, there is another cost cutting which is coming by way of shutting down certain offices, certain premises of Byjus in the city of Bangalore. So two offices of Byjus have been closed, one permanently and completely fully closed down. This is the Kalyani Tech Park in Bangalore, and apparently 2 out of 9 floors that were occupied by Byjus in the fairly prestigious Prestige Tech Park in Bangalore have also been vacated. It continues to fully run its Bannerghatta Knowledge Park, which is the IBC Knowledge Park office. That continues to be fully operational. And overall, I think with this almost 6 lakh square footage vacated, many employees have been asked to work from home, and some employees have been asked to work from other operational facilities like the one left over at the Prestige IT Park as well as the Bannerghatta Knowledge Park. So this is how I think some sort of cost control, some management of excessive outgo of cash is being looked at. Overall, trying to assure investors, trying to assure employees and the media that some sort of a recovery could be underway soon.
Some semblance of recovery,
hopefully,
at least is in the cards for Byjus. Byju Ravindran, of course, trying to clean his house and put it in order. There is a renegotiation of loan terms. There's also existing premises that Byjus continue to operate that will be vacated. We will, of course, bring you details as and when the story moves further on from here. But shifting focus now to another important story and stock that we're tracking, and that is, by the way, of Reliance. Reliance is now going to operate data centers through special purpose vehicles. What does that really mean for India, Karthik?
So Shweta, this is in fact a big story, and this story is going to unfold, and we will peel layers of this story as we move along. But primarily, data centers are gold. This is a facility, a highly guarded facility, with all the Mission Impossible sort of safety features in place, where retina scans and biometrics and multiple layers guarding these huge servers which are housed underground, mostly underground, in facilities specifically curated that they don't get flooded in case of some sort of a fire breakout or some minor explosion. The data centers are protected, and the data centers are kept absolutely safe. Now, what are these data centers? These data centers are pretty much what we understand as cloud, right? You don't have any information stored locally on your computer, you store it on the internet. And the assumption is it goes on the cloud, but the cloud is actually not somewhere up there in the skies.
It's a server.
The cloud is actually a data center.
Right.
The cloud is, these are servers, multiple servers with backups of each server housed in a facility called a data center. This is gold mine for real estate. It commands premium real estate rentals, very, very long-term sort of contracts that you can't just move data centers one fine day with one notice of eviction. And these are data centers which are, the value of these data centers is much more precious than gold, because this data gets lost, this data gets corrupt, and pretty much every application, every enterprise which has any data of its own or of its customers is gone, right? So up until now, US has been the leader when it comes to data centers, and data centers are also spread across the globe in multiple geographies. And when you do, let's say, an internet test speed, when you ping, you know, it actually pings a particular server which is housed in a data center and gives you your rate of speed or your sort of, you know, rate of recovery or transmission of data. All that happens basically because of the proximity of the data center. How long does it take from your laptop and one internet connection to ping a certain server for that server to respond to you? Now, when you look at, let's say, you know, I'll give you some basic examples. You want to stream some content on Netflix or on Newsline Plus, a streaming platform, right? You want to stream content. That content is housed somewhere. And that content then real time gets distributed using content distribution networks or CDN. So that content gets streamed real time from some data center, bouncing off to some tower and coming onto your device, which is reading internet off that tower. So the closer you have data centers to your house, or the closer you have it to your country's geography, the better are your internet speeds. Now imagine this in the context. And the more protected is the data. Yeah, I'll just come to protection, right? That's a whole new debate. But, but I'm just talking about speed and efficiency right now. So with Jio rolling out 5G services and Airtel and many other players rolling out 5G services, with artificial intelligence, which uses a lot of server space and a lot of processing power to churn this data. Where is all that happening? It's happening somewhere in the cloud, which means it's happening in a data center. So 5G, artificial intelligence, Internet of Things, IoT, all of these are applications which will require data to be transformed, churned to produce results almost real time. And if that happens when the proximity of the server is closer to you, it just improves agility, efficiency, speed. So this is one part of it, and which is why data centers in India are a big deal, because up until now data centers were housed in USA, in Germany, in other parts of Europe, including UK, closer home, China, where we don't have any control over our data, even closer home or similarly distance to home, Singapore. These have been major data centers in the world. India has been slow in its takeoff of data servers. You had companies like SIFI own a few data centers. In fact, we have one very close to our office in Sector 125, Noida. But apart from that, large-scale data centers were missing. Now, let's talk about the safety of data, and this is where the perspective becomes even more interesting, is that Government of India has been wanting to house Indian data in India itself, and not just data that it owns, which is our data of our income tax returns, our Aadhaar, and all the other government services, the public digital infrastructure and the public digital goods. Not just that, but even companies doing business in India. And I'm talking about big tech here: Google, Meta, Facebook, Instagram, WhatsApp, Telegram, Apple, right? These are companies, Twitter, these are companies over which there are multiple battles of data protection and data housing being fought. Now, unfortunately, until these data centers, and hence this data within these data centers is housed outside of India, Indian government does not have jurisdiction.
Very little control.
Very little control. If this data is housed within an Indian facility, within the confines of India's geography, and by an Indian company holding at least 1/3, which is the case with Reliance, the other 1/3 being held by Brookfield, as well as Digital Realty Limited, which is a real estate company. So as long as there is an Indian company in control of that data center, as long as it is housed in India, the government has far more control over that data.
And it's far more safe.
Safety,
as is assumed,
I think, is going to be still a challenge, because
as is
if you
assumed,
ask me, the first two cities where Reliance, this special purpose vehicle, this joint venture, tripartite joint venture, the two cities where the data is going to be housed in these data centers is going to be Mumbai and Chennai.
Right.
Where I fear humidity and flooding and excessive rainfall are a concern.
When I say safe,
I think there are enough people who would have done enough and more due diligence to ensure that it continues to be safe in these two cities.
So when I say safe, I'm saying in context of China, which is what in the Indian government has constantly brought to forth.
So the layers
fears
of protection,
around
the layers
protection
of safety of this data, the layers of preventing leakage or misuse of this data is the positive. But then the government being able to extract influence over that data is a threat.
Absolutely.
And that, I think, is something that hopefully we should all be safeguarded against in the new telecom bill and the new Digital India bill, which hopefully, if not in the monsoon session, in the winter session ahead of elections should come to fruition.
The space is heating up, adding to what Karthik has said, because Adani had already invested 213 million in this space before. So
$1 million, million rupees?
$1 billion.
Okay.
213 adds to the Reliance 122. So this space is heating up in India. So the challenge to China, we are very much there.
All right. We are, of course.
Intentions are there at least.
Okay. We are posing a formidable challenge to India. Both Adani and Ambani, of course, trying to build data centers in India. How successful they're going to be, especially in cities which are more prone to flooding and humidity, we'll of course have to wait and watch out. But moving on to another interesting story that we're tracking, and that is coming from the auto space at this juncture. Auto company, auto major giant Maruti is recalling as many as 87,000 vehicles. What's the problem with these vehicles?
It's a defect that has been discovered in their steering unit, which basically it could break or it poses a problem in handling and steering. So 87,599 of their S-Presso and Eeco models have been recalled. S-Presso was launched in 2019. And Eeco is as old as 2010, so it is a van sort of a vehicle, as you can see. Now, this is one of the largest recalls by a Maruti company in recent years. 2 years ago, 2 lakh units of the Ciaz, Vitara Brezza, and XL6 petrol variant had been recalled by Maruti, and that time it was for a motor generating unit defect. Same year, 2 years before that, 1.34 lakh units of Wagon R and Baleno hatchback for a faulty fuel pump had been recalled. The same year, 63,493 units for again a faulty motor generator unit in the Ciaz, Ertiga and XL petrol variant had been recalled. So it has been happening, but Maruti has been upfront in basically owning up and recalling every time they find a fault in their engines or fuel or steering units or wherever in their machinery.
Krishna, it's going to greatly inconvenience people who have S-Presso or an Eeco van for that matter. The recall of as many as 87,000, that's a big number.
Right, but then recalls are part and parcel of all big auto majors across the world. In fact, it also shows their honesty. Instead of letting faulty cars be in the streets all the time, you have company, and as Amit was talking about, there's been a bunch of recalls that Maruti has witnessed over the last couple of years. Yes, certainly this is a big one. But then again, you're talking about the S-Presso and the Eeco models. Maruti is right now riding high on on Invicto and all the new models that are hitting the market. It's SUV play that is expanding by the day, and in fact and growing, and in fact to a dominant spot. So I would say that S-Presso and Eeco models being called off. Yes, the stock said it, but then again, I always see these recalls as a car company owning up to it. We've seen global majors not own up to their mistakes, to the faults in their vehicles. So, in that context, I'm always happy when a car maker owns up to a fault in their product and then recalling them to fix it.
Right. Right. All right. And another story that we continue to track in the auto space is that of Tesla. We're given to understand Tesla officials are going to meet Piyush Goyal. They're planning to set up a new factory. The big foray of Tesla in India, of course, continues to be a major point of discussion here, Krishna.
Oh yeah, I'm looking at Karthik wanting to have us go at this one. But yeah, Tesla cars in India is the if you ask me, apart from Twitter, Musk's way into India of 1.4 billion people strong market. Tesla is the closest. Yes, he wants to bring Starlink to India to provide internet services to the most remotest parts of India, which are not touched by internet. But then again, Tesla is the easiest. And if an under 20 lakh rupee car from Tesla hits the Indian market, I'm not really sure. It's going to be one of those iPhone things, Shweta. Tesla cars are really expensive. Indians looking at Tesla, hey, I'm not going to spend that much on a sedan. Indians will look at everything from kitni deti hai mileage to other things. Spending 20 lakh rupees, people want a 7-seater ideally, or a 6-seater at least. But a sedan for barely a 4 to 5-seater for 20 lakh rupees seems like a lot. But the moment Tesla comes to India, the kind of aspirational value that Tesla would come to India with, I'm expecting Indians, especially the upwardly mobile, aspirational, from upper middle class to upper class Indians, to lap it up just like they lap up the iPhones, which are not exactly value for money in that real sense of term, but are great value for aspiration.
Right, and what we do know so far is that representatives from Tesla will be meeting Commerce Minister Piyush Goyal very, very soon. This is going to be an all-new car for India specifically, a car which is under $24,000, and of course all eyes are going to be on what this car is. This is literally 25% cheaper than this.
Yeah, the cheapest car that Tesla sells internationally, the Model 3, which is also one of its top selling models, is $32,000 in China. In China, where it manufactures right now. Right. Now a manufacturing plant in India to sell the same model or some tweaks to that model for $24,000 and below, amounting present day dollar conversion to about 20 lakh rupees, is going to be a game changer for EVs in India. Remember, a hybrid right now sells for over 20 lakh rupees. The Honda City hybrid is 22 lakh rupees. The Innova High Cross is a hybrid which is about 27-28 lakh rupees. Imagine owning a Tesla at 20 lakh rupees is going to be a game changer. Absolutely. If it goes through.
Very, very competitive.
The only thing I would look out for is their service center network, because Indians are not going to, just lap up a new car because it looks cool and comes from Elon Musk. They will need to do something about, I hope that along with the plans to manufacture this under 20 lakh rupee car in India, there is a good plan for a good service network in India as well. And also, I hope that arrival of Tesla really provides the boost for the EV ecosystem in terms of charging stations and service centers, both, Shweta.
All right, and all eyes are going to be on Tesla as and when that happens. Moving on to another important story that we're tracking, and that is coming by the way of EPFO. EPFO interest rate on your PF for financial year 23 will be 8.15%. This is lower than what was in early 2000, but the government has
higher than what it was last year.
Higher than what it was last year, but way lower than what it was at about 12% as of 10 years ago. But government has now ratified this rate.
That's right, and this rate is applicable for FY23, which means every contribution which has been made already will not draw an interest of 8.15% against 8.10% last year. And I think the year before, or in 2012, 2013, this was at about 8.5%, right? So 8.5%, it has tapered down, inched slightly up, but this is retirement corpus. This is money which is absolutely safe, comes with sovereign guarantee, and this is money which is still giving you an interest, a tax-free interest at 8.15%, much higher than fixed deposits, which give you no more than 7.58%, even in a high interest rate cycle. So I think for all those who have collected the retirement corpus, at least for the financial year gone by, the rate of 8.15% has been ratified, and that is the interest that will be drawn.
That is of course the interest that you will be drawing on your PF, your Provident Fund, for financial year 23. And with that, it's a wrap on this bulletin. Thanks very much for watching.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, the Pakistan military withdraws from Balochistan and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Balochistan?
Balochistan, Bangladesh 2.0, streaming now.
He thought he could outlast us. And 1 year later, the evidence is right here in this room.
Who will blink first?
So far from preventing the expansion of NATO, Russian actions have actually resulted in the expansion of NATO.
It's a mess for Russia and it's a mess for the Western world, for NATO and the United States.
Putin is a dictator, and if he loses, that means the end of his regime, and probably of him personally. So he has to keep going.
Year 2, no end in sight. Streaming now.
Our Supreme Court has evolved into a third organ of governance and not just an institution for resolving disputes. So this is the fundamental difference between the two systems which has come into being. Our court moving ahead as an institution of governance, the American court taking a step backwards and giving back more power to the electorate.
Talking of the US, which comes to my mind is the laws pertaining to guns. And that I feel is so regressive.
I wouldn't say that the Supreme Court of the United States is regressive. Conservative, yes.
Theodore Roosevelt said, "A great democracy has to be progressive, or it will soon cease to be great or a democracy." This is exactly what we've seen in recent judgments of the Supreme Court of India. At the same time, the Supreme Court of the United States has delivered judgments that seem to be more conservative. Those conducting such tests based on a patriarchal mindset will be punished, warned the Apex Court. Another recent Supreme Court verdict allowed unmarried and single women with pregnancies between 20 to 24 weeks to abort and legally access safe abortion care.
This MTP Act was made in the year 1971. Basically, it was allowed only for married women. Vulnerable categories were made under Rule 3B, where abortion rights were given to few categories of women up to 24 weeks, like minors, rape victims, physically disabled, mentally retarded, divorcee, widows. Now this judgment will help to all the women, irrespectively now married, unmarried, minor, to use their right up to 24 weeks.
The judgment was progressive in another regard.
The Supreme Court has extended and reached marital rape also in terms of MTP Act, where any married woman is carrying pregnancy that is done by her husband only, forcibly upon her, and she doesn't want to continue the pregnancy. In such case, she is also allowed to terminate her pregnancy up to 24 weeks.
Our courts are in sync with the progressive sensibilities of modern India. In contrast, the world is turning more regressive. The ruling sparked protests across the United States.
We have accepted that life includes dignity. Once you accept that the right to life is not a right to an existence, but it's a right to an existence with dignity, then so many things come in. The right to have a limited control over your body comes in through the same route. The choice of your own sexuality